Hey there, welcome to the Management Accounting Mastery Program. And in this lesson, we're really going to be introducing the idea of costs because this is like the basis of management accounting. We really want to understand our costs and we really want to be able to calculate our true cost so that we can be able to see whether the business is being profitable or not, and we can make good management decisions. So that's basically the entire idea behind management accounting, to try and make better management decisions. So in this specific lesson, we're going to cover three things. First is what is a cost and why we classify cost. And then we're going to move to differentiate between product cost and period cost. And then after that, we're going to speak about the three components of product cost, right? What makes up a product cost? So let's start by understanding the idea of a cost. So a cost is basically money we give up to get something, right? So if you think about it, if a business buys certain raw materials, then that's a cost to the business because they're giving up money to get the material. Same thing when we're paying for workers, we're giving up money to get labor. Same thing when we're paying for rent, right? These are all costs. We're basically giving up money to get something in return. So why do we classify cost? So managers usually need to know how much it costs to make a product, right? And if they know how much it costs to make a product, they can be able to set the right price, because the whole aim of a business is to make sure that we set a price which is higher than how much it's costing us to make that product, so that we can make a profit, because our objective is to make a profit. So if we're able to know how much it costs to make a product and we're able to set the right price, then we can be able to calculate the correct profit as well, right? So if we classify our cost correctly, we'll be able to calculate the correct profit. But if we classify cost incorrectly, then profit will be wrong and decisions will also be wrong, right? Remember, we said the entire point of management accounting is to make better management decisions. So for us to make better management decisions, we must be able to get the cost correctly. And then after getting the cost correctly, we'll be able to calculate profitability correctly, and we can make better management decisions by focusing on the products that are bringing more profit and discontinuing the products that are not bringing profit. So we're going to dive deep into this a little bit further. So let's speak about the difference between product cost and period cost, right? Because we have two types of cost. So product costs are basically costs to make the product, right? So if you think about, let's use an example of a company that manufactures furniture, and you say the cost that they'll incur to make the product can be things like wood, fabric, paint, and all those kind of things. Those things are product costs because they are costs that are related to making the product. Without this costs, then the product wouldn't exist. And then you have period costs. So period costs are usually not related to the production process at all, right? So I'll give you an example, like accounting services. When we pay an accountant to come to our books and we're manufacturing furniture, this is not related to the production process, because we might not have an accountant, but we can still produce furniture, right? So accounting services are not related to the production process. Same thing as marketing. We might be able to produce the product, have a finished product, and then we're going to hire marketing after so that they sell for us, but it's not related to the production process. So that's the key difference between product cost and period cost. And then I just want us to dive deeper into the idea of product cost, right? Because at the end of the day, in management accounting, we really want to be able to cost our products correctly. Like I said, if we can cost our products correctly, we're able to set a correct price and we're able to calculate profitability much better, and we'll make better decisions. So this is the manufacturing cost formula, or the product cost formula. So it's made up of three things. First, it's direct material. So it's made up of direct material, and then you add direct labor, and then you add manufacturing overheads. What's the difference between these three things? So direct materials are usually materials that become part of a final product. So the nice way to think about it is, if you can physically see it in the product, it's direct material. Let's go back to our example of a company that produces furniture. Like the wood, we can directly see it in the furniture, therefore that's direct material. The paint, let's say we paint the table, we can directly see it in the product, therefore that's direct material. So that's the key. Direct material are basically those materials that become part of the final product. We can directly see it, we can trace it back to the product. And then you have direct labor, same thing. These are workers who directly build or make the product, right? So if like they physically work on the product, like for example, assembly workers or the people that maybe put it together and basically are involved physically in the production process, that's like direct labor, right? So if they are physically working on the product, then that's direct labor. And then you have manufacturing overheads. Manufacturing overheads are all the other factory costs that are not direct material. So are not direct material or direct labor. They are not direct material, they are not direct labor, meaning that we can't really trace them directly to the product, or we can't really physically see them in the product, and we can't say, okay, cool, how much of this resource went to the specific product. We can't directly trace it to the product. So I'll give you an example, like factory rent. So factory rent we can pay for at the factory, but we can't specifically say 10% of the rent went to this specific product. Same thing with electricity. We can't realistically say 10% of our electricity went to the specific product. So that's usually like your manufacturing overheads. These are costs that are not direct material, but at the same time, they're not direct labor, right? So they are manufacturing overheads. So it's all the other factory costs other than direct material and direct labor. So just to summarize this lesson, a cost is money that is sacrificed to get something else, right? And costs must be classified correctly, right? They must be classified correctly. And then after that, we've spoke about the idea of a product cost. The product cost is made up of your direct material, direct labor, and manufacturing overheads, right? And on the previous slides, we basically break down the difference between the three. And thank you for listening to this video. If you need more assistance or support from us, just look at the description of this video and you'll find more details on how you can get more assistance from us, helping you genius up in accounting.